All right, let's talk about a stock that just had an absolutely wild day. We're going to break down the technicals behind one of the most explosive moves on the market. IVVD, that's ticker IVVD. And the big question we're tackling today is this the start of a massive breakthrough, or is it a classic overbought trough?
32.69%. I mean, just look at that number. In a single day. When you see something like that, you gotta ask.
You know, what on earth could cause a surge that big? And maybe, more importantly, what are the technical signals telling us about what could happen next? So to get to the bottom of this, we're going to walk through the technical report piece by piece. First, we'll look at that explosive day itself. Then we'll get the report's main conclusion right up front. After that, we'll decode the technical signals that are driving everything, map out the key price levels you need to watch, and finally, lay out 3 possible scenarios for the future. Okay, so first up, let's set the stage. What was the catalyst? What kicked off this incredible move? Well, it all boiled down to one huge piece of news. On November 14th, IVVD dropped some really positive phase 3 trial data for its COVID-19 antibody candidate. Now, for a biotech company like this, that kind of data is, well, it's everything. It's the make or break news that can either send a stock to the moon or into the ground. So, naturally, investors piled in, hoping they were catching the start of the next big thing. And when I say they piled in, I am not kidding. Just look at the sheer scale of this. The average trading volume for IVVD was sitting around 20 million shares. On this day, it shot up to over 136 million shares. Folks, that's not just interest. That is an absolute trading frenzy. It tells you there is massive, massive conviction behind this move. So with that incredible backdrop, what does the full technical report actually say about all this? Let's cut right to the chase and get the main takeaway. And right here, this is the central tension of the whole story. On one hand, you've got this undeniable bullish momentum. The stock just exploded, backed by fantastic news. But on the other hand, some of the technical indicators are flashing these big warning signs, specifically overbought oscillators, which is just a fancy way of saying this stock might have gone too far, too fast, and a pullback could be right around the corner. Understanding that conflict is really the key here. So to do that, we need to kind of pop the hood and take a look at the engine of this analysis, the technical signals themselves. First up, moving averages. The report uses 2 kinds. Think of the simple moving average, the SMA, as the slow and steady historian. It gives equal weight to all the data in its period. But the exponential moving average, the EMA, that's more like a fast-reacting journalist. It gives more importance to the most recent price action, so it tells you about changes a lot quicker. Next, let's talk about momentum indicators. The best way to think about these is like the accelerator in your car. They don't just tell you which direction you're going, they tell you how fast and how powerfully you're moving in that direction. And wow, this chart right here, it perfectly shows the bullish side of the argument. You've got the MACD showing a bullish crossover, the ADX says the trend is actually getting stronger, and the moving average alignment score, a solid 3, which strongly favors the buyers. It's all green lights. The accelerator is just slammed to the floor. But now, let's look at the other side of the dashboard. Let's talk oscillators. Think of these like the tachometer in your car, the one that shows the RPMs. They tell you if the engine is revving way too high and hitting the red zone, which traders call overbought, or if it's maybe idling too low, what they'd call oversold. And yup, here's where those warning lights start blinking. The RSI, the Relative Strength Index, is pushing 70, which is that traditional line for being overbought. And the Stochn RSI, it's at 100. It is literally maxed out. It cannot go any higher. This is basically telling us the engine is redlining and there's a serious risk of exhaustion or a pullback. The momentum is incredibly strong, but it might not be sustainable. Okay, so let's translate all this into a practical map for traders. Knowing the bullish and bearish signals is one thing, but where does the rubber actually meet the road? Well, that's where we look at the key price levels. I want you to think of these 3 numbers as the battlefield. Up top, you've got resistance at 268. That's the ceiling the bulls have to smash through to keep this rally going. Down at the bottom, there's support at 209. That's the floor the bears have to break to prove a reversal is happening. And right in the middle, you have the pivot point at 242. That's the balance point that's going to tell us which side is winning the fight. So let's put it all together. We've got the powerful news, we've got these conflicting indicators, and we've got our key price levels. With all that, we can outline 3 pretty distinct possibilities for where IVVD's stock might head next. First, let's look at the bullish case. If that massive trading volume keeps up and the RSI indicator stays strong, the bulls could absolutely push the price right through that 268 resistance level. If that happens, the next logical target is the 52-week high of 276. This is the breakthrough scenario. Then, of course, you've got the bearish case. This is where those overbought oscillators we saw finally win the day. The buying frenzy just burns out, people start taking profits, and the price reverses. If it breaks below that key support level of 209, that would be a pretty clear signal that a real pullback is underway. This is your overbought trap scenario. And finally, there's the third path, the neutral one. The initial excitement just kind of fades, the volume dies down, and the stock just chops back and forth around that 242 pivot point. In this case, the market is basically in a holding pattern, just waiting for the next big piece of news, something like official feedback from the FDA.
And that brings us right back to our main question. On one side, you have this incredibly powerful fundamental story, the kind of news that is the lifeblood of any biotech company, and it's driving insane momentum. But on the other side, you have the technical reality of a stock that's just redlining, maybe stretched to its breaking point. And that, right there, is the classic high-stakes puzzle of biotech investing, trying to figure out when a breakthrough story has outrun its own technicals.